Hey everyone, have you been wondering how the real estate market is in Huntsville, Alabama? Well, I'm about to give you a recap on what happened in February 2020 in the Huntsville real estate market. Check it out. Hey, my name is Brandon Taylor with Capstone Realty. I'm an engineer turned realtor, and so I love diving into the numbers. And so today I'm going to do a February market recap, and I'm going to look at the statistics, what changed, what went well for buyers and sellers and investors in the Huntsville market, and maybe a little peek into what I think is coming up as well. So every month when I look at the market, there's a few things that affect the market. Basically, we're looking at supply, things that affect supply of homes, and demand. And so what impacts that? And so we have some metrics we can look back at in February to see how supply is doing, how demand is doing, and what I may think that could change those going forward. So first up, let's show you some charts. Here is the supply chart from the last year. You can see how many houses are for sale. We're looking in Madison County, and these are the houses that are for sale. From last January, we were at 1,300 homes for sale in the county, and now we're down to 965. So that's in the last 13 months. That's a pretty big decrease in supply of homes. The market doesn't have as many options as it used to. There are a lot of people moving to town, which is driving that. And so I think that's just, that's going to be here for a while. We are going to have a bit of a supply shortage for going forward for a little while. And it hasn't really improved at all in the last few months. So that's where we are as far as supply. Demand is a little more complicated to look at because it's harder to gauge demand directly because you can't count it's hard to count how many house buyers are out there at any given point. And so what we look at is, first off, we look at number of sales that happened each month. And so if you look for the last year, you can see we're going to look at 3 years of data. And when you look at the 3-year chart, you can see the rise into the summer and the fall into the winter, the rise into the summer, the fall into the winter, the rise into the summer, and the fall into the winter. And every year, February and January and February are among the lowest months of the year for the past 3 years for sure. And if you go back, I think that seasonality holds up. So we are at a low point. You can see that February, there were 530 sales in the county, according to this data set, and that compared to January, 547. But we're a good bit over our low from last year. So last year's low in January was 430, and we were at 478 last February, so exactly 12 months ago. So we've gone from 478 to 530, which is a pretty good size increase in demand, especially when you consider that there's still the supply problem. So even though there's not many houses for sale, we're still managing to sell more houses than we did last year, which speaks to very healthy demand. Another thing that we can look at for demand is pending sales. So pending sales is a little bit forward-looking. It's how many are under contract but haven't closed yet. And you can look at, there was a big spike in those sales in January and February this year. And normally you don't see those spikes until March. And so we're kind of a month or two even ahead of the spike. So we are seeing very healthy demand as far as how many pending houses are for sale. When you're seeing that kind of number that we normally don't see until maybe last year we didn't see. So right now we have 768 that went pending in February. And we didn't see it go over that until last May. And so we're doing that in February. So that speaks to the demand that there is for housing right now, especially when you look at the low supply. Another thing that talks to demand is days on market. When you have real low days on market, that speaks to there being some, I've heard it called pent-up demand, that there are buyers out there willing to buy as soon as the house comes on the market. And so as that time gets shorter and shorter, that average days on market, and which we're seeing. The median days on market in February was only 8 days. So half of the houses that sold last month were on the market for less than 8 days. That's substantial. That's a lot of houses selling within a week. The average is a little higher. There are always some high number ones. New construction are one of those things. So the model house will sell and it will be on the market sometimes for a couple of years or 18 months or something like that. And so that's throw off your averages a little bit. But so the median's a pretty good thing to follow. But when we're seeing 8 days in February, when the buying season really ramps up in March and April and May, it's going to be a very strong seller's market. Hey guys, so real quick, I filmed all of that on Tuesday, and there's been a lot of changes this week. And so before I post this on Friday, I thought I would go ahead and give you an update and just my thoughts on the coronavirus and the impacts on the real estate market. So the truth is, I don't know what the coronavirus is going to do to the real estate market. Obviously, there was a big change to the stock market this week with a very big fall. And that doesn't bode well necessarily, but real estate prices don't normally react as quickly as stock prices do. And so we wouldn't expect a huge correction in real estate prices immediately. But I do think there could be a softening on demand. We don't have metrics though to measure demand directly. As I mentioned earlier, most of our metrics for demand are all lag indicators. We only know how much demand there was based on how many houses sold. And so I do have some anecdotes from other agents who have said that some of their clients are, taking a break, seeing what happens before they finish buying. But at the same time, I know a lot of people have to buy a house. Their lease is ending or they're moving to town or whatever. And so there's still gonna be good demand. I do think it could soften up a little bit while people are trying to figure out what the coronavirus means for them long term. Truth is, I won't know. I am gonna be watching the pendings closely to see how fast houses are going pending, watching the days on market to see if there's any change in that throughout the month to see if we're gonna see a softening or not from this. So those are my thoughts. Back to what I filmed earlier this week. We combine supply and demand and look at something called months of inventory. We measure, basically, if we take the number of houses we have right now and sell them at the rate we sold them last month, how long would it be till we ran out of houses? And a neutral market is about 6 months of inventory historically. That means buyers and sellers don't really have much leverage over each other. And move below 6 months, the stronger of a seller's market is. The more you move above it, the stronger the buyer side of the market is. Well, right now we're in a very strong seller's market. We're at 1.4 months of inventory in February. That's not very much. And so there's not a ton of houses out there for a buyer to look at. All this impacts sales price, and you should see it, right? So supply and demand, demand is inversely proportionate to the sales price. The more supply, it goes down. The higher the demand, the higher the price. They're directly related, and the supply is indirectly. The more supply, the lower the price. And so where the balance is that we've seen significant increases in price. If you look at this chart over the last 3 years, you can see that right now our median sales price in Madison County is $222,000, and that's compared to last year at this time we were at $195,000. So seeing almost a $30,000 increase in average sales price in just 1 year. It's pretty significant. The rate does seem to have increased in the last 12 months over what it was the 12 and the 24 months before that. Looking at the chart, if you put a line through those data points. So that's what prices are doing. The last thing is mortgage rates. With this little dip in the market that we've had because of the coronavirus, the mortgage rates dropped even more at the end of February, beginning of March. And so this means that your buying power goes a little farther, which so buyers probably can push the prices even a little bit higher in the seller's market for the same payments that they would have made a few months ago. And so that's where we are as far as that. That's supply money really does affect housing prices because availability money and who's qualifying. So now the so what, right? The bottom line for buyers is that buyers this spring are going to have to be aggressive. The comps they're a lag indicator, right? So we're looking at how much a house was worth a few months ago or 6 months ago, but we're in an appreciating market. And so we have to realize that we can be above the comps and be paying with the value of the house. And so a buyer needs to realize that. Buyers also need to realize that multiple offers are very common right now. And so they need to go in realizing that when there's 4 offers, there's 3 people that lose and 1 person that wins. And so you want to go in aggressively so that you can win it. But you also need to realize that it's 3 times more likely that you lose it. And so you have to go in patient. So being patient and being aggressive when you find the house you want are the rules for buyers right now. Sellers, if you are selling right now, it is a time to generate as much excitement as possible because you've only got a few days to get the best offer for your house. And so you do want to do a good job marketing. Pre-listing marketing, I think, is really important right now. Making it look really good online for several days before it goes active so that first couple of days, you know that your most likely buyers have already seen the pictures on the internet, and so that people don't call you the day after you took a contract and say, oh, I didn't see it. That's what you're trying to avoid, I think, as sellers right now. And so I think a great marketing plan from a realtor like myself is imperative because you have such a short timeline to get people to see the house. And being aggressive, but not being too greedy. People still are you still can overprice a house, even in this market. Like there are houses that sit because they are overpriced. And so while the comps, you can try to push the comps and be above the comps, you can't go crazy and expect to sell your house. People aren't willing to pay anything for a house, but a lot of people are willing to pay what a house is worth. And so we need to list it for what it's worth, get those multiple offers in there and see if we can get a little bit above it. That's the strategy right now for buyers and sellers. That's where we are as far as market update. Let me know if you have any questions. You can text me at 256-617-3975. Give me a call there as well, or hit me up on Instagram, Brandon_K_Taylor, or at Facebook at Brandon Taylor Real Estate. All right, guys, that does it for this month. Hope you have a great one, and let me know if you need any help. Bye, guys.